Hey guys, Nick here from Nick's Taxes, and today we're going to talk about some tax tips for self-employed individuals in Canada. Now this has been something that has been requested by a number of you guys on my Instagram and on my YouTube comments, and so due to popular demand, I am coming out with this video. Now if there's something that you want me to talk about, just let me know in the comment section and I will work on making those kind of videos for you guys. And that's exactly why I'm making this video here, because a lot of you guys are interested in this. A lot of my followers are indeed self-employed. So I'm coming out with some basic tax tips for self-employed individuals here. Also, quick plug, if you're on Instagram or Twitter, give me a follow at Nick's Taxes. I'm also on Facebook as well. And of course, if you get value out of this video, just give it a thumbs up. It just helps my channel grow. Really appreciate that. And please consider subscribing if you are new here. But let's get started. I want to clear up this issue here on taxes. This is a big one here. The tax return for self-employed individuals is June 15th, okay? However, your taxes due is April 30th, just like everyone else. And so what's the difference? Let me clear this up. When I say your taxes are due, that means the amount of money you owe in taxes. And so often, like when you file a tax return and there's a balance owing, those would be your taxes that are due. And the tax return is just the actual return itself, like the paper that you're filing or electronically filing. That can be due June 15th. But if you're filing your tax return and you have a balance owing, that balance is actually due April 30th. So it's actually due before the June 15th deadline, which basically means you need to either know how much you owe in tax or have your tax return done before April 30th to make sure that you hit that taxes due deadline. One little tip here is if you're actually in a refund position, then obviously there's no taxes due and your tax return is due June 15th, but there's no late filing penalties for filing it later if you are in a refund position. All right, let's talk about some basic business expenses. Those would include things like your advertising, your startup costs. Also, if you've received a loan to, get your business up and running, that would include the interest on said loan, shipping and delivery costs, legal and professional fees and dues, your phone, your internet expenses. These are all things that are business expenses. Basically anything that involves your business, things that you need to operate your business and to generate a profit or a revenue, those could be considered business expenses. This obviously isn't the full list, so I'd encourage you to check the CRA website and their forms for a full list to see which expenses could affect you and your self-employed business that you have. Now, one of the business expenses that you have available to you, if applicable, is the home office. And so for home office expenses, they work basically as a percentage of your total home. So say your home is 1,000 square feet and your home office is 100 square feet. Well, quick maths, that would be 10% of your home, and therefore 10% of your home costs could be put towards your home office expenses. And so these home office expenses would include things like rent, if you're renting, or utilities. So 10% of these costs of running your house could be put towards your home office. It's basically saying that, because it's 10% of your house, 10% of the expenses to run the house can be attributable towards the home office. And again, I'd encourage you to check the CRA forms. If you're looking, it's the form T2125, and it has a full list of the expenses there for self-employed, including this home office. Travel and entertainment is something else you can take advantage of as a self-employed individual. You can expense up to 50% of your meals and entertainment. So if you're taking a client out to a business dinner, you can expense 50% of that. Now, these have to be reasonable costs. Like, if you just take your client out, to an average restaurant, like if you go into Eastside Mario's for a business meal, that's fine. But all of a sudden, if you're in Dubai and you're ordering the the gold-plated steak that costs you $10,000, the CRA might come back and say, you know what, that's not really a reasonable business meal, and therefore we're not going to accept that 50% meal deduction. So these things have to be reasonable. Same for entertainment. You can expense 50% of entertainment. Say you take a client out to, a sports game, you can do that. If you're going to a business-related event, you can expense 100% of the travel and the cost related to that travel. So say you're going to a conference, you can expense the hotel fees, the conference fees, and obviously the transportation to get to and from that event. And so speaking of transportation, next thing that you have available to you is the vehicle expenses. Vehicle expenses, to figure out how much you can expense from your vehicle, assuming that you use it both for business and personal, is similar to the home office expense, where you need to find a percentage of how much you use it for business. And so for the home office, we looked at, the proportion of the home office compared to the total home. For vehicles, we look at how many kilometers you have driven the vehicle for business compared to the total amount of kilometers driven in a tax year. Tax year is the same as a calendar year. So say you drove the car 100 kilometers and 10 of those kilometers were for business. Obviously, quick math, again, 10%. Therefore, you could expense 10% of your total gas, insurance, and repair fees. Now, it's a good idea to keep record of these things, especially like gas. If you're filling up once or twice a week, keep an ongoing expense tab of how much you're paying for these things. So that way, when you're figuring out that percentage, you already have the totals there. Now, I've starred parking fees because parking fees, you do not need that percentage used. Like if you're taking your family, I'm in Ontario, so if you're going to Toronto and you're taking your family to a Jays game and you're paying for parking, you're not going to be able to deduct a portion of that for your business. But you are able to deduct the full amount of parking fees for things related to your business, right? If you're going to a client meeting and you have to pay for parking, well, you can expense that full amount. You don't have to use that 10% law that we had. Now, again, like I've said, it's important to keep records of this, especially for the vehicle, as these fees and these costs are typically ongoing, so it's just easier to keep track of. Here's some commonly missed expenses that we see for most people that are self-employed. Obviously, different niches are going to have some other expenses that might be commonly missed, but for most people, these fees are related to them, and so it's important to remember that these can be expensed. If you have a business bank account, those fees and those bank charges that a lot of these big banks charge, those you can expense. We just talked about the parking fees. If you're paying for a vehicle, if you have it on lease or you're financing it, the interest on the vehicle payments can be expensed. Private health service plans, the premiums on those can be expensed. And home office cleaning supplies can also be expensed. Often those are small and people just forget about them, but you can expense home office cleaning supplies on your business tax return. Also, for 2020 tax year, just be knowledgeable of the COVID impacts on your tax return. I've talked at length about the CERB and the CRB. Just understand if you've received those, that those are taxable on your tax return. And if you've been a part of the wage subsidy, the CEWS, or the CEBA, understand the impacts of that as well. Also, just be aware that those are out there in case, as of right now, you need some extra recovery relief. You can take a look at those options if applicable. All right, my final thoughts. Have a good tax software, and you can also expense your tax software on your tax return. Or if you're not doing your taxes yourself, have a good accountant, and they will be able to help you maybe even realize some expenses that you didn't understand, or you didn't realize that you could get the full aspect of it. So sometimes it pays in terms of potential refunds in actually having a good accountant or a good tax software to help you out, or in terms of just saving time. And speaking of saving time, have good bookkeeping. There's apps out there. You can hire a bookkeeper. I don't know if you just use Excel, but have a plan. and have a good bookkeeping program for yourself, whatever works best for you. And I'd encourage you to have an ongoing process instead of doing it once a year or twice a year. Do it, spend a little bit of time every day or once a week updating your books, so that way come tax time, it's not such a huge burden. And then once you kind of have this plan set up and this process set up, it's easy to carry it over year. So find something that works best for you in terms of bookkeeping for your taxes. So that's all for today's video. I'm Nick from Nick's Taxes. If you got value out of this video, again, give it a thumbs up. And if you have any questions or comments, put them in the comment section below. Let me know. Love to hear your thoughts. If you have any advice on what you'd like me to cover, let me know in the comments below as well. I listen to those and try to make videos that you guys are interested in. So again, I'm Nick from Nick's Taxes, and as always, happy taxing.